Hey everyone, it's the Living Picker, and today it's a little warmer than I would expect. It was rainy this morning, but it's actually cleared up. But I'm not going to be doing too much work in the garage because I got a couple things I got to do on the computer. And today we're going to talk about a very important topic to resellers today, so we got to keep that in mind as well. So I'm going to go out to the garage. I got to put the tripod. Oh, whoop! The tripod it just came apart, and and back and the ring light and stuff and do a couple things. But then we're going to get into our topic for today. Okay, so I got the tripod put back together. For some reason the screw wasn't tightened, so it came right apart when I tried to pick it up by that top part. I got the ring light back hanging where it's supposed to be. This home theater system right here, I will probably deal with it later today. Hopefully, I'm hoping to get to it today. It might not get gotten to today because I got some other things I forgot about today to do, so that might have to wait. But that's pretty much what I'm going to be doing out here as of right now. Hopefully, I can get back out here today and get some work done. These are actually going to probably come inside with me today. Or at least tomorrow, because I gotta get working on these puzzles. And this mug is not really worth it to lift, so I'm just gonna use it. So, oh yeah, that needs to go in the trash. But the DVD player. But yeah, that's about what I have to do. And basically, this DVD player right here. Before I forget about it. And that is the end of the DVD player. So, so in this life, there are two certain things: death and taxes. Unfortunately, taxes, we gotta pay them. And for resellers this year, the rules have changed somewhat. The specific rule I'm talking about is the reporting requirements for third-party payment processors like eBay, PayPal, Venmo. And if you have done $600 or more in transactions on these platforms for business for sales of goods and services, that is going to require the platform to report a 1099-K and send it to you. So what does this mean? It means if you've been doing credit card transactions for your business, or if you've been selling goods on eBay, you've done over $600 in transactions, you are going to receive a 1099-K. And this is a tax reporting document that the processor has to fill out and file. So most resellers, or at least most casual resellers who just resell as like a part-time business, etc., have never ever seen this form because the old reporting requirements were higher. It used to be 200 transactions that totaled $20,000 or more. But this year they lowered it to $600 and it can be just one transaction. So most people are going to be confused. Some people might think it's a mistake. It is not a mistake because the law changed this year. It's part of the American Rescue Act. The thing is, with a rule like this, I don't know who the hell they were rescuing. So if you've received this form, it's not a mistake. Another important point that you need to know is if you receive this form, the IRS has already issued a warning that you should not ignore this form. Because if you receive a copy of the 1099-K and you don't report it on your tax return, the IRS is going to know about it because they receive a copy too. And if you don't report it on your income, the IRS has told us that they're going to come after us. So the way I understand it is if you do not report your 1099-K income to the IRS on your return, the IRS is going to send you an automated letter to your address telling you that you need to pay taxes on that income. And that's going to carry a penalty. And this penalty can be kind of steep because it starts at $50 and goes up to like $6,000 if I understand it correctly. And that doesn't even include the underpayment penalty as well. That's just a penalty for not reporting this income. So if you do receive this 1099-K, you definitely should not ignore it. So my opinion is that this particular rule was very poorly thought out because $600 is such a low amount that almost anything is going to trigger this reporting requirement It's going to require more paperwork for the payment processors. It's going to just require more paperwork for everybody, including the IRS. It's going to be really hard to enforce this. And because the threshold is now so low, the chances of getting this form by mistake is higher because only certain transactions require a Form 1099-K. Say personal transactions such as splitting meals don't really require a 1099-K. And some payment processors have made allowances to allow you to categorize different income from personal and business so that you can avoid getting a 1099-K. But a lot of people like to split meal expenses on Venmo. And if you've done that over $600 and haven't declared it properly, you're going to get this 1099-K. And that is going to be a mistake. And the way that the IRS says that you should handle that is to go to the payment processor and ask for an amendment so that they can amend the 1099-K. However, I don't think payment processors are going to want to do that. And the second thing is send a letter to the IRS. I don't know if that's going to work because IRS might just take a look at that and say, well, you can't prove it, so now you have to pay taxes on that money. So in the real world, I don't think that's going to work very well. So in my opinion, and only my opinion, I don't think this rule is going to last very long because this rule is just so strict. It's going to take a lot of paperwork and manpower to enforce it. It's going to take a lot of paperwork for people to comply. And it's going to turn this tax season into a complete and utter shit show. It's just going to be so complicated, and a lot of people aren't going to like it. The payment processors already don't like it. The people aren't going to like it. A lot of people, even without the 1099-K, they've been able to file their taxes using free versions of software. Now they're going to have to upgrade to the premium version to be able to report that 1099-K. So that's another expense that they're going to have to pay to file their taxes for such a small amount of money. It just creates more red tape. And it's going to discourage business, going to discourage small resellers. It's going to be a deterrent for business to have the threshold so low. The bottom line is you probably should not ignore the 1099-K that you get in the mail. If you need help filing your taxes or advice on how to deal with it, consult your local CPAs, tax assistants, and tax attorneys. What I've said is definitely not tax advice or financial advice. The IRS seems very serious about pursuing this line of enforcement. Be ready for it, because the forms will go out in January. And that's the video for today, and I will see you in the next video. Take care.